Good morning. Did you receive your free tickets to visit the Egyptian museums you back car?
Yes, sir. What are your question of today, Professor Zahi Hawass?
Could you please talk about how to measure an investment in equity securities?
The investment is measured at fair value at each balance sheet date. Unrealized holding gains or losses on the remeasurement of the investment to fair value are reported in income statement, a component of net income, at each subsequent reporting date. Dividends received from investment in equity securities are reported as dividend income in income statement. Cash flows from purchases and sales of equity securities are classified in the statement of cash flows based on the nature and purpose for which the securities were acquired.
I would be grateful if you give me an example of measuring an investment in equity securities.
Okay, the example is, a Munra company in association with the Holy of the Holiest company purchased 200 shares of Toya Company's common stock at fair value at November 1st, year 1. This investment is less than 1% of the ownership interests in Toya Company. The fair values per share of Toya Company common stock at relevant dates are as follows: $100 at November 1st, year 1, the date of purchase; $90 at December 31st, year 1, the first closing date; and $115 at December 31st, year 2, the subsequent closing date. You are required to measure and remeasure this investment in the 3 dates mentioned above.
First of all, I like the names given to the 2 companies in the example because both cope with the place where we are and my specialty. In answering your question, 1. On November 1st, year 1, a journal entry to record the purchase of equity securities is to be made. Debit investment in equity securities for $20,000 being 200 shares at $100 per share, and credit cash for $20,000. 2. On December 31st, year 1, a journal entry to remeasure the equity securities at the closing date is to be made. Debit and realized holding loss of $2,000, being the difference between $100 and $90 the new fair value, $10 multiplied by 200 shares, and credit investment in equity securities for $2,000. 3. On December 31st, year 2, a journal entry to remeasure the equity securities at the subsequent closing date is to be made. Debit investment in equity securities of $5,000, being the difference between $90 and $115 the newest fair value, $25 multiplied by 200 shares, and credit and realized holding gain for $5,000. Thus, the investment in equity securities should be reported in the balance sheet at $20,000, $18,000, and $23,000 at November 1st, year 1, at December 31st, year 1, and at December 31st, year 2 respectively.
Before I say that your answer is totally correct, I should be proud of being able to convey accounting information to a non-accountant. But to tell the truth, you are perfect wherever you are. By the way, is there any secrets behind the Western hat you always wear?
No secrets are there, and if any, I will uncover it as a unique discovery in an international press conference. Do not ever forget that I am Zahi Hawass, who perfectly knows how, when, and where to uncover information to get the maximum return.